Good morning traders, Paul here with GammaEdge. Today is Friday the 19th of August. Let's get started. First of all, read the fine print. Important to you, important to us. If you get to the bottom and you agree, hit that play button. Summary for today, short-term trend is down. We are in the second day of that short-term trend down. Intermediate term is up, but it's under pressure. Long-term trend is up, but it too is slowing. You'll see that on the next slide. Overall, the zeros of the complex continue to advance. This actually is okay, but just be aware the spot price and the complex price or complex zeros are not necessarily in synchronization. The complex is a forward view of value, whereas spot price is literally what the auction is saying it is today. Be aware of this. Often price leads the momentum of the option complex. One thing of note today, positive deltas appear to be dropping. When we see those positive deltas dropping, we want to pay attention. I'll call those out as we go forward here. We do think this is a crack in the ice, perhaps starting of a bearish trend. Could be simply a pullback and a consolidation with all the OPEX. We'll just have to watch and see. Upside 4,400 remains plus GEX. That's good. You'll see that 4,000 has resumed the minus GEX level. It's taken it from 3,900. A couple reasons that could occur. Nevertheless, puts are coming up closer to spot price. Usually that is a bearish indication. We'll want to watch that also. Note the transition zone below us is getting very, very loose. It's ill-defined. This is because the puts have been put pretty far down in the chain as we've moved up, and there is a very little structure as we go forward. So overall, I would say a slightly bearish outlook. Could be short-term, could be a consolidation to a new advance. We'll just have to wait and see what happens here. Market model, as I said, long-term, the slopes of the moving average ribbon are all positive, but your eye can see we're starting to kind of slow down here as the cumulative tick gets closer and closer. The pressure to pull these slopes up is minimized. I think the key takeaway here is that the distance above the ribbons, which is typically where we want to be if we're bullish in our sentiment, is getting narrower and narrower. We're watching to see this collapse, and that will turn off the intermediate term signal. And if the instantaneous cumulative tick, the white line, gets below this sign, it actually turns off everything and moves us to a bearish position. As long as it remains above the ribbon, we have a bullish viewpoint on the market, and we would be in the hunt to enter long positions if we get a reversal. Just keep an eye on this. Short term, we didn't really strongly take out yesterday's highs. The shortest term moving averages, these little white lines that you see here, are in a downtrend, and if we continue in a downtrend, we might establish what we call a railroad track, but it'll be to the downside. And if we establish a downside railroad track, we could actually intersect here. And as I said, that would put this entire long-term bull under pressure. So keep an eye on this. This is going to be very important to how we monitor sentiment shifts within the overall market. Index condition, over here on the left is the combo. Here in the middle is the AM settled in isolation. Over here on the right is the PM settled. Today is at the open, the expiry of the monthlies. That will be the settlement for the SPX AM settled. Last trading day was actually yesterday. So now we enter into the Septembers for the AM. The PM, a little bit of bearishness creeping in. We had the zero here of just the PM moving downward from 41.95 to 41.90. We actually had the puts coming up a little bit underneath it. And again, when we see that, that is short-term bearish, and we want to pay attention to that. Contrasting all of that, we had some short-term puts coming out of the complex and short-term calls going in as measured by the net cumulative gamma. And when we see that, you know, we want to think about what's happening. So it does appear in the PM, which is your dailies and your quarterlies, it does appear that perhaps some bullishness is developing in the net gamma, but you can see the zero dropping and the puts coming up closer. So something to bear to watch. Mixed signals. I know it's, you guys want black and white, and it doesn't work that way. Over here on the combo, which is the combination of both of these, really hard to read, not a lot of change. I would say slight more negative on the net put side or net negative gamma side. In general, when we see this type of relationship, we're still bullish, excuse me. Just note that we're a little under pressure here, and we'll just have to watch and see what happens, like everything. The history of the zeros, as I said, we're seeing that positive advancement on all major indices and ETFs, so just keep that in mind. We potentially could see spot price, which is shown in blue, come down towards these. That would be healthy. The question is do we start seeing a downturn in the overall complexes as the market positions for a downward move? And we're not seeing that per se. Taking a look at the OI changes, another mixed picture here, right? So where we see the zeros going up in the complex, we're actually seeing OI being added out. Now look at the scales here, the major divisions here, minus 100K, minus 50K. So don't get confused on the x-axis here. These do auto scale so that we can look at the relative values pretty easily. I want everyone to pay attention that we are continuing to see puts going in, and some of them are out in time. Right, so we want to pay attention to that. These are the Septembers for the SPX, and you can see where the distributions of these things are going in. So red indicates closure, green indicates open, and you can see that with the expiry going on, we did have some net changes as things were rolled out in time and either up or down in price. Levels for today, I just want to point out we are starting to see some negative values. That's negative deltas. When we see that, the overall structure is changing its dynamic, and we want to pay attention to that. Some of you may notice that the expected move is shown as 1.89 and 0.95. This uses a combination of the AM settled, which everyone should be aware. Settles this morning at the open at 9:30 Eastern time in the cash market, which is why this is reduced. Let's look at this as our expected move. This is what we expect as the values for today. I did independently check these. I'm sticking by these numbers. We could very easily see this. I doubt we're going to stay this low. This is again driven by the SPX complex, where this AM complex, where this is driven by the PM complex. When we take a look at the 0 DTE, that same transition range, we closed in there yesterday. You can see for the 0 DTE the range that we could potentially move today, so up to 43.60 down to 42.05. Very, probable type of range to stick within. I will note that this transition zone here, I would not be surprised at all if we finished there into the day today. We'll just have to wait and see where we go. Above this 43.25 level, you can see contributions from the 0 DTE get less, and it's really ill-defined down here. We do have a positive gamma expiry. We want to make sure that we watch that today. As we remove this, we could see a little bit of instability, but we could also open the path north. This could be just a pause, as I said earlier, so just keep aware of that. Taking a look at the combo complex, which is the AM plus the PM, really bad structure to the downside. You'll see it on the next slide also. We still have some pretty dominant levels to watch here. We see these negative deltas creeping in more and more. The magnitudes of the positive deltas are lessening. When we see that, this is typical of a structure that is shifting, that we're seeing less upside calls being put in and more of the downside going in. Now, part of this is the expiry, no question. We've been rolling out and taking those AM settled contracts and throwing them out into later months. And when we take that away, that could very easily expose this. Now remember, the puts that are here are going to be, as long as the yellow line is below these puts, they're going to be in the money. So we're going to see these deltas run towards -1 today if you're on the put side, which is over here. But if you're on the call side, of course, just the calls that are down here are going to be in the money, and everything up here is going to be out of the money. So a real battle going on. Positive overall condition. We're going to want to watch this. I will say this though, we're watching the delta, this threshold level where we got positive deltas. We're watching this come down, and when this threshold comes down, that is a potential topping or indication of a sentiment change. So pay attention to this stuff. Upside 4,400 remains. We've got some dominant gamma levels up there. A lot of absorption going to happen if we're going to move up or down, so we'll have to pay attention to that. Finally, the overall SPX structure, 4,400 upside, 4,000 retakes it from 3,900. You can see really terrible looking transition area here. Last line that we even think about here is 4110. I would say that's a stretch. These levels here are going to give lots and lots of warning if we move down into this area, which is here. You can see where we closed. If we start moving down to this area, we're going to see puts really start developing and exploding down here. We will also see this start to get monetized as we move away from it. 4,300 is the dominant line here, closest to where we are. 4,400, as I said, is positive GEC, so you can see there's a couple intermediate steps there as we move up. So with that, I think we can, we're kind of locked in above transition, below the predominant range here. We're pulling back a little bit, so we'll just have to wait and see what happens. But I'm more cautious going into the weekend than I have been. So with that, I'll bid you farewell. If you like today's content, come join us at GammaEdge.us. When you get there, click on the pricing tag, get you into the Discord. 14-day free trial, all the tools turned on, great group of traders, all experience levels from beginner to literally highly advanced and large portfolios and small portfolios, etc. So lots to learn from people there. GammaEdge is with an S on Twitter. Please follow us. Always helps there. And then here on YouTube, of course, if you like today's content, let me know. Smash that like button and subscribe so you get notified next time Taylor, myself, or Michael post a video. With that, have a great Friday. Make it a great weekend, and we will see you here in the next video. Thanks a lot.